When buying a home, having a poor credit score versus a medium versus a good could save you thousands of dollars, along with saving you hundreds of dollars each month in the payment alone. So we're going to go over some simple steps in this video about how you can make changes today to help you boost your credit score before you buy a home, or maybe even while you're in the process of buying a home. Your credit score is not just a number, it's actually your entire financial reputation. It's the way creditors will be looking at you not as a number, but as how much financial integrity have you had with credit given to you, how you've used it, abused it, or not used it, and not established. So it's essentially given a full financial history of how you've maintained the way you pay bills. Let's dive in and take a look at how this score is actually broken down. Exactly. So there's 5 main components that make up your credit score. First, you have your payment history. This is 35% of what goes into what's called your FICO score. This is one of the biggest factors. If you don't have a positive payment history, which means you don't pay on time, every single time you pay late, your credit score is going down. So it's always important to pay your payment before the due date and never ever pay late, because payment history is huge. So roughly that means your credit cards, always pay them on time. Your car loan, always pay them on time. Even your utilities, they don't hold very much weight, always pay them on time. Anything you're given for credit that has a payment due, you must pay on time. The second big one is credit utilization. This is 30% of your credit score. So what do I mean by credit utilization? What this looks at is the amount of credit you're given. So for example, let's say you have a credit card and it has a $5,000 limit. You never ever want to use more than 40% of the available credit given to you. So in our example, if your limit was 5,000 and 40% of credit utilization means 2,500, you never want to have a balance above $2,000. And also, you're best to keep your utilization of your credit below 10% of your maximum available credit. This way, it allows your credit card companies to come back once you've earned it and have good payment history to reward you by increasing your credit line, which automatically increases your credit score. Number 3, length of credit history. This is 15% of your credit score. What does length of credit history mean? It means the longer you've had your credit established, the better you are. So if you've had credit cards for a long period of time, do not close them, leave them open. The longer you have the credit cards, even if you're not using them, and you keep them open, you don't close them, it still helps you. Think about it this way. If 2 people have exactly the same FICO score, but the length of credit history for one is, let's say 3 months, but the other guy has a 2-year history of making on-time payments. The one with the 2-year history is always more rewarded because it shows consistent good behavior. This next one's kind of simple. It's only 10% of your score. It's your credit mix. So credit mix means, what do you have? You have credit cards, student loans, car loans, installment loans. You want to have a little bit of a mixture amongst all of them, but you never want to be utilizing too much credit. So just have a little bit of credit mix. It helps you. Don't go out of your way to get like credit card, student loan, installment, all these other different types, because it's a small percentage of your loans. Keep it simple. It's always better that way. Here's why your credit score really matters when you're buying a home. Lenders directly look at your credit score, and that directly goes into the interest rate that you get. It also is affected by the loan program. People with lower FICO scores get worse loan programs. People with better FICO scores get better loan programs. It's just a game of probabilities. The bank is looking at who is the most likely to pay everything on time, and the people that most of the time pay everything on time have really good FICO scores. People that don't pay on time and make mistakes, they have low FICO scores. So that's why the higher your FICO score, the better terms you get on the loan, the better interest rates you get, and the overall better deal you get. Let's say your FICO score is 620. You're buying a home. Your interest rate may be 7.25. The same person who's buying a home has a FICO score of 740. Their interest rate's 6.125. So the difference could be hundreds of dollars per month. So if you're concerned about payments and you want the lowest per month, you'll want a better FICO score. Let's take a look at 3 steps you can use right now to boost your credit score. They're simple. Let's walk through them and take a look. Step 1, check your credit report. So you can go to freecreditreport.com, Credit Karma, you can go to your local bank dork, whatever you like, or you can get a free credit report from TransUnion, Experian, or Equifax. They all give them away once a year for free. So ask for a free credit report, have a qualified smart lender look at it. That's your first step right there. Step 2, pay down your credit cards and your debt. Remember what we talked about. The lesser amount of credit utilization you use, the better off you are. So let's start by simply paying down some of your debts so that it increases your FICO score because you're using less of the credit available to you. You want to knock out your bad debt first. That usually means the credit cards are the debt that you have with the highest interest rates. Final thing, sounds like common sense, always pay on time. Pay your credit cards on time. Once you pay them late one time in a 1-year period, your FICO score has been hit and damaged. Pay everything on time. Credit cards, car loans, installment loans, student loans, utility bills, your streaming bills, pay everything on time. So if you need to start from ground zero with building your credit, here's another way you can do this as well. Go out, get a secured credit card. What does that mean? Most of the time they're like Capital One, they ask for a $300 deposit, then they give you a credit card. It's now a secured credit card, but it allows you to start building credit. So if you're someone out there that has no credit at all, I would start building your FICO score by getting a secured credit card. Then use all the tips we already went over and slowly build your credit over the length of time you have that card open. Another quick fix that you can look at is, do you have collections? When you pulled your free credit report, did you find out you have collections on there? If you have collections on there, take care of them. Pay off your debt. This will also help you build your credit score right away. So we went through a lot in this video. If you use all these steps, you should have a better understanding of how you can build your credit, what goes into your credit score. Just wanted to say thank you for watching. If you like what I did, if you want to make bad comments below, I'd love to see them. Otherwise, like and subscribe. And thanks again for watching.